My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people make friends. I'm just trying to make a little money. My job is not just to entertain you, but to explain all this to you. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. Milestones might seem arbitrary, but they can tell you a lot about what works in a given market. Today, while the S&P dipped 0.21%, NASDAQ edged down 0.26%, the star of the show is the Dow Jones Industrial Average, which briefly crossed above 40,000 before pulling back a bit and closing down 39 points. Still, that's a huge leap from where we arrived at Dow 30,000 back in November of 2020. So you know what? I think it's worth exploring what stocks got us here and why. During this period, we've constantly been told that tech is the market leader. But when I look at the top 10 stocks that are up the most during the Dow's trip from 30,000 to 40,000, it's a very surprising group. Only 2 of them from tech. We also kept hearing that interest rates are all that matters. But that's played a smaller role than expected, too. Only the 10th stock really impacted. Instead, it's an odd grouping, where the main thing these companies have in common is very strong, exceptional management. Let's run them down so we can learn what the market really wants here. I need you to think about this, even though we didn't close above 40,000. This is what matters. First is American Express, up 100% since Dow 30,000. Now, look, we could say that gain came from post-COVID travel and leisure boom, right? Makes sense. Amex has been a major beneficiary of the long on money, short on time thesis, where people question how they were living their lives, wanted to travel and see the world after COVID made them recognize their own mortality. Another way to look at it, get busy living or get busy dying, if you want to put it in Shawshank terms. Dining out also jumped because the rise of work from home spurred a post-work camaraderie. Cooped up? Go out for dinner with colleagues after work, or really anybody for that matter. I'd agree that that's a big part of what American Express has become a winner. But you know what? How about this? How about thinking about Steve Squeri? He's the CEO who got the top job 6 years ago. I think his decision to go after younger people, millennials, Gen Zers, as potential customers, has ignited card use and given Amex tons of new customers with a tremendous lifetime value. This generation came up with online comparison shopping. Hey, practically from birth. They want value. They want bargains. They're frugal. Squeri knows if you give them a good deal, you can keep them as long as you offer a lot of personalized service and a robust point system. They love points. It's working. Second is Caterpillar, up 98% over the same period. Again, there's an obvious reason for success, all the federal infrastructure money that's on the way. And again, the obvious does matter, but the secret sauce behind this move has more to do with the success of Jim Umpleby, the terrific, unassuming CEO who's been at the helm since 2017. When Umpleby took over, he made a decision to de-cyclicalize Caterpillar, make it less of a boom-bust industry, while focusing on returning capital to shareholders via buybacks. He also decided to diversify away from China. In retrospect, come on, what a brilliant move. These days, data centers and energy are the big movers for the stock of Caterpillar. Now, the analysts have been very slow to recognize these changes, with many fighting the stock tooth and nail all the way up. I say Umpleby's done the unthinkable with this one. Big cyclical stock that he's turning into a semi-secular growth story. Third, Microsoft, 97% rally. Got plenty to do with CEO Satya Nadella's decision to go all in on his cloud infrastructure business called Azure. Oh, it was a gutsy bet going up against Amazon for web services, wasn't it? But it's paid off. Most recently, the aggressive posture toward AI with the big investment in OpenAI has put Microsoft in pole position, some say driver's seat, in an artificial intelligence race. It's one of the few companies besides NVIDIA that has an actual AI profit center. Fourth, David Solomon's taken some real heat for some of his term at the helm of Goldman Sachs. But the stock is giving a 96% gain, for heaven's sake, during the Dow's run from 30,000 to 40,000. Those who spew negativity are way out of whack with reality here. By returning Goldman to its roots, focusing on the wealthiest of the wealthy while staying on top of M&A and IPOs, he's quietly giving you some gigantic gains. He's rolling back the previous agenda when the company was trying to pivot to the consumer, regular people, which blew up in their face because, well, that was never what the Golden Slacks was about to begin with. He used to be rough around the edges, but he's a good business person who knows when to cut his losses. A terrific quality that you rarely see on the arrogant Wall Street. Fifth is Rob Davis, and this man has lit a fire under Merck. He's pressed his bet on the company's amazing cancer franchise, Keytruda, but more important, he's taken those oncology profits and using them to make acquisitions to bulk up the pipeline. Merck shelled out $11.5 billion for Acceleron with its cardio franchise, and then $10.8 billion for Prometheus, which has a promising immunology profile. And these two takeovers will help them cope with Keytruda losing patent protection in 2028. That great management is giving you the stock of a 71% gain since November 2020. Do you know it would be substantially lower if these Davis acquisitions hadn't been made? 6, Chevron CEO Mike Wirth puts his shareholder front and center. This company pays an outsized dividend with consistent growth, which makes its stock the bluest chip in the integrated oil space. Some say the best thing he's done is go after Hess in a deal that's being challenged right now by regulators. I think the best thing Wirth did was to not overpay for Anadarko. He let that very expensive acquisition go to Occidental Petroleum, which almost ruined it if it weren't for Warren Buffett. Chevron stock would have rallied over 68% since November 2020 if he foolishly won the bidding war for that property. It would be much, much lower. It wasn't luck. He knew. 7th, there are many reasons why I say own Apple, don't trade it. We saw one of them during the run from Dow 30,000, which is the triumph of their service revenue stream. The remarkable amalgam of all the things you pay for Apple, for once you've been ensconced in the ecosystem, it just keeps growing and growing. Given the amazing customer satisfaction, you can extrapolate the service revenue stream into a lifetime value per customer. And you know that the cell phone purchase is just the beginning of the profits. All right, still an overdependence on China, I get that, which is why Apple's expanding aggressively into other areas with big population centers. Look, in the end, I think Tim Cook's done a remarkable job. He's improving some products, inventing others. You got to like it. 8, Jamie Dimon, the CEO of JP Morgan, is a great banker. What else is it supposed to say? He's got a great banking team, rarely makes mistakes. He's got a tremendous loan book. The stock's still cheap, even as it's run from 64% since November 2020. I like the dividend, too. 9th, for the most part, these winners can't be pinned on the Federal Reserve. But I will say that Travelers, the big insurance company, has benefited mightily from higher interest rates, which have dramatically increased its profits. It's a good underwriter, dominating certain lines, but I think its investment portfolio is the main driver for the more than 60% gain over this period. Finally, when I examine the United Health Group and try to assess its 55% rally, I come back with 2 reasons. 1, we can't seem to get the cost of health care under control. And 2, Optum, their health services arm, is incredibly lucrative. I wouldn't know how to roll back price increases here. Sadly, health care inflation seems like a given. The bottom line, to me, this list is emblematic of the fact that we should spend a lot less time focusing on the Fed. It's really only fueled the gain of Travelers, and a lot more time discussing management and mission. That's what propels these stocks long term, and that's what makes the difference. Let's go to Eric in California. Eric.
Yes, Jim.
Eric.
Eric from California.
All right, what's going on,
Eric? Give me your opinion on Groupon. One of the biggest laggers of all time.
Well,
they say that
it's correct that it's lagging. It's correct that it's lagging. Groupon, holy cow! I mean, Groupon? No, I mean, no. It's got a little gain here this year. I would take it. Let's go to Joe in Florida. Joe.
Hi, Jim.
Joe.
Just want to let you know that I'm a proud club member.
There we go.
I love your stuff.
Thank you, man. I'll keep working for you. Keep working for you. What's going on?
Thank you. Hey, it's the best steel maker in America. Their first quarter earnings fell short, and for this quarter, they're providing weak guidance. Yet a couple weeks ago on your show, the Nucor CEO said 2024 will be a very good year. The stock in the last 6 weeks fell almost 13% since its high. Is this stock a buy? Thank you, Jim.
Okay, we're watching it. You know, it's in the bullpen. Jeff Marks and I were talking about it today. There's going to be a level where we feel more confident than right here because we still think that there are grades of steel that are coming down. But it will be a coiled spring once the Fed starts cutting. So you got to think, well, we're close. We're close. Let's go to Rocco in New York. Rocco. Rocco? Rocco? You're up.
Oh, hi. Sorry, I was on mute.
That's all right. That's all right. Okay.
First-time caller. I'm a long-time listener. I'm really curious on your opinion on Reddit stock.
Oh, Reddit's easy. I've been saying buy. I think it's one of those companies like Pinterest that is now part of the bundle of what advertisers want. They are reaching the right people when you can get them, and people age up in that thing. I think it's a terrific, terrific stock. I really like Reddit. I want to go to Vera in New Jersey. Vera.
Hello, Jim.
Vera,
Thanks
how
for
are you?
taking my call.
Of course.
Long-time fan, first-time caller,
Okay,
and a
first time.
2-year club member.
Yes.
Much
Thank you
older
very
than
much.
you.
Everyone should join the
Much
club.
older
I
than you,
kill it.
but
Right.
still learning.
I try so hard. You know, what's up?
Okay, I am much older than you, but still learning. You
Hey,
are
that's
a
okay.
great teacher.
That's okay.
My question for you is on AMD. Buy, sell, or hold?
AMD, Lisa Sue's doing a terrific job. I think she's going to revise up how many of these GPU of the really good chips she's going to have and how much she's going to sell. I think you buy AMD here. All right, look. This list that I've just put together is the perfect reason why maybe we should stop obsessing about the Fed all the time. Maybe we start listening to what the companies are telling us and doing, because that's what's propelling these stocks higher. Management. Man, money tonight. What footwear stocks are a good fit in this tape? I'm telling you which names I think can keep running. Then CrowdStrike's up over 260% since last January. So I'm checking out some charts that are defending further growth for this cyber powerhouse. And don't miss out on one software stock that I think is headed still higher in the changing ad market. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.